There are many rules to trading, but one of the important ones is to pay yourself. Before you lose all of your money trading in the markets, you have to watch this video because I'm going to tell you what to look out for before any market crashes to the ground. If it's showing these signs, then you have to get the out of that market. These are the signs that I've learned in order to be able to get out of a market before it crashes. In this example, I'm going to show you how I got out of XRP just before it dumped. XRP is Ripple, a cryptocurrency, otherwise known as Cripple, from The Rational Investor. Go check those guys out. And in this video, I'm going to show you how I lost my life savings. Okay, fine, that was clickbait. Don't click away. I didn't really lose all of my life savings, but I did get out of the market just in time before it crashed, and I'm going to show you how. In order to show you this, I'm going to take you into the charts and actually show you when I got out. Right here, you can see this little red arrow. That's where I sold and got out, and this is what happened afterwards. The market completely dumped. And this is an XRP to BTC, so I sold my Ripple to get Bitcoin, and because it was on this date, which is the 12th of the 12th, the 12th of December, if you look at a Bitcoin chart, the 12th of December was this date, and then I started selling as it went up. So not only did I stop myself from losing money on Ripple, but I actually made the money on Bitcoin as it went up. You can see these red sell, 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 sell. I sold all of the money that I got from that trade in Bitcoin, so I saved myself from losing money and I made a profit. But how the hell did I know that it was going to dump? I'm going to show you right now. You may think that I read the news and I saw some really negative news and I got out just in time as they announced the news. Wouldn't that be great if you could read the news and know when to trade? Unfortunately, that's not how it works. The news is a lagging indicator, which means it's always late, and I'll prove it to you. This article came out on December 23rd. Ripple's XRP token has fallen more than 30% after the SEC filed a lawsuit against the cryptocurrency firm. Okay, that's pretty bad. They got a lawsuit, and it says it fell after. Now, if you go to the actual SEC filing, you can see that it was filed on the 22nd of the 12th, so the 22nd of December. Now, the 22nd of December on the chart is this blue line right here. And you can see that I sold 1, 2, 3, 4, 5, 6, 7, 8, 9 days before that happened. Now, that article was correct. Ripple did dump another 30, 40% after that article, but I was already out days ago. So how the hell did I know that it was going to happen? There are two techniques that I'm going to show you in this video of how I knew to get out of the market at that specific time. So make sure you're watching. And if you're not a trader, if you're not an investor, it's still important to know this stuff. If you're ever considering investing, you need to know if you need to be in a market or out of a market. If a market's about to dump, you shouldn't be in that market. So it's good to know. The first lesson is to sell the M breakdown. And I'm going to show you what this means. Right here at this point is a line in the middle of a big fat M. An M means that the market is going to go down. It's much easier to see on a line chart. So I'm going to move this to a line chart right now so you can see the M shape. You see that M right there? That is an M. This is an M right here. And this midpoint over here is this big fat M, and you want to sell the M's in the market. To show you this more clearly, I'll just draw a big fat M here. You see that M? And this line right in the middle is where you need to sell the breakdown. You can see I even got a little bit late, but it's still safe. Now on the screen I've written, when the market's smiling at you, ... And the end of that phrase is when the market's smiling at you, which basically is the same as an M. You've got those 2 points there, and then the little smile in the middle. And over here, you can see you've got another little smile over here. And right over here, you've got another little smile right over here. When the market is smiling at you, it's about to take your money. This is a phrase that I learned from The Rational Investor, Brian Beamish. So go check them out if you want to learn about trading in more detail. I'm not affiliated with them at all, but I do love them. I've been there for years now, and I've learned almost everything from them. So when the market's smiling at you, it's about to take your money. Another way I like to remember this, and this is one that I made up myself, is that when there's a W, you're about to get a winner. And when there's an M, you're about to have misery. So now that's another quick way. W's are winners, M's are miserable. So make sure you get out if you see an M. Now, there's one other way that I know to get out of a market just before it's about to dump. And this is based on something called the bot, also something I learned from the Rational Investor. I'm going to give you a crash course on the bot right now and show you what happens when it fails. The bot trade is a continuation trade, which basically means that when the market has done a certain move, it then retraces a certain amount, and the next move is called the continuation. It's an A, B, C, D move. So this is the first part of the move. This is the first A to B, and you want to draw this with a 33 and a 66, and the market has to retrace between 33 and 66. So you can see from the move down here up to the move up here, the market then came back down to this point, which is between 33 and 66. So that's the first stage of the bot. Remember, this is a crash course, so don't worry if you're missing it a little bit. Now, the second part of the move moves from C to D. So it's gone A to B and then C to D. And the trade that we want to do is from the 25 level up to the top. So you can see it's a 3-to-1 risk reward on average. On the second retracement tool that you draw a 25 level, a 50 level, and a 66 level. And the goal is to enter on this 25 level and exit at this top level, which gives you a 3-to-1 risk reward. Now, the 50% level is where you move your stop to scratch, and the 66 level is where you move your stop to trailing, but I'll leave that for another video because I don't want to overcomplicate it. Now, what happens when the bot fails means it breaks this C level, and you can see right here, it broke that C level. So right over here, you could have sold the bot breakdown. And the reasoning is because if this bot trade fails, then this entire continuation pattern is off the table, and you can expect the market to completely crash after that point. Now, all of this works in reverse as well. If you have a bearish bot which fails, then it's going to be pointing up. But in this case, the bullish bot failed, so it's going to be going down. So before losing all of your money in the market, make sure you look out for these patterns. You've got the M shape. So if you have that M structure and it fails and it falls down, you want to get out. And if you have that continuation pattern that fails, you also want to get out. All in all, the action that I took here saved me 70% loss on my money there. Wow. And because I went straight into Bitcoin, held it for a little bit and sold it later, I actually made 25%, 29% on this bit, 41% and 54% just because I moved my money from Ripple to Bitcoin and managed to get out at those targets as well. So hopefully this has helped you if you're thinking about getting into the market. Thank you so much for watching, and I'll see you in the next video.